What factors in your mind combine to make this such an astounding year, such a record breaker?
Money costs nothing. The Federal Reserve for 5 years now has kept interest rates at zero. And Ben Bernanke, you got to tip your champagne glass to him tonight. He's followed that on with $3.5 trillion of conjuring up money out of thin air to buy bonds, to buy mortgage securities. And of course, that's going to trickle down to the stock market.
Now, nearly 11 million people are still unemployed. That doesn't even count those who are underemployed, searching for work, who have given up looking. How come this isn't resulting in the millions of new jobs that one would have thought, perhaps?
Yes, you compare this to the Clinton bull market of the late 90s, where actually Bill Clinton and Al Gore and Robert Rubin and his other, the Treasury secretaries would come out and run victory laps about this because you had an investor class that was truly participating in the roaring bull market of the 1990s, and unemployment was at or around 5%, the natural level of unemployment. How long has it been since we heard that term? But right now, it's very much a tale of two worlds. Wall Street is loving life. Corporations can borrow for next to nothing, and yet unemployment remains stubbornly high, and it doesn't even fully account for the tons of people, the underemployed people, all of the 20-somethings living at home with mom and dad, all of the 40, 50-somethings who are working under their means just to have a foot in the door, just to be able to say that they are nominally employed. So it'll be curious to see in 2014 if some of the enthusiasm from corporate America spills over into the payroll situation.
Now, Robin, are you worried at all about a bubble? Where do you think this is going to go in 2014?
Well, we are handing over the Federal Reserve from Ben Bernanke now to Janet Yellen, and we have had instances in the past where the Fed has had to go back on its word. If you look at 1994, and they had to come in and hike rates coming out of the Gulf War recession of the early 1990s. If something like that happens again, I think everybody is now so complacent about money costing nothing and interest rates being at near zero and mortgages being so cheap that if the Fed comes out and says, actually, guys, wait a minute, we're going to have to slam the brakes a tad, that could cause a crash type situation. But for the first time in 13 years, a ton of money is actually sluicing into the markets. And we haven't seen that for most of the 5 years of this bull market.